Welcome everyone to today's December daily Q&A session. I'm Rachel Neighbors. You're here for Neighbors Group and solo401k.com. We do these December Q&A sessions every day in December so that you can have your questions answered. There's so much that we're trying to do at the end of the year. It's a flurry of activity trying to get everything done. And we want to make sure that you have a place that you can come so that you can get your questions answered. Dirk, you are so awesome. I was literally going to ask you, let me know if you can see and hear me okay. So thank you for letting me know, Dirk. You're already ahead of the game. Today is Saturday, December 26th. I hope that you had a wonderful Christmas if you celebrate. And if you don't celebrate, if you're like my family growing up, you went out and had great Chinese food last night and had a nice, relaxing day off. So very Merry Christmas to all who celebrate. And for those that don't, I hope you at least had a chance to have a little bit of downtime. We have some pre-submitted questions here. So as always, we're going to jump right in. If you are new to Neighbors Group and you are new to solo401k.com, I just want to remind you that the IRS deadline for December 31st is quickly approaching. So if you are brand new to us, you're still thinking about opening a solo 401k for 2020, you have time, but time is also running out. So it's very easy to get started with us. You will complete your solo 401k application online, which will take you all of 5 minutes. And then we have your documents ready same day. We are open today. We are open tomorrow. We're open every day until the end of the year. So even if you get in your application this weekend, you will have your documents ready for 2020. Now, I want to just cover what that entails. Really, according to the IRS, having your documents from us is what qualifies you for your 2020 plan. We hold the official status of your plan with the IRS. So as long as you get in your application in the next few days, then your plan will be qualified for 2020. And of course, if you already have your solo 401k with us, I know some of you have been with us for 10, 15 years, then you guys are already qualified. If you're brand new, get in your application in the next couple of days so we can prepare your solo 401k plan. Now, the IRS is closed. They close at the last week of the year every year, but we can still prepare your documents. We will prepare your 401k plan and we'll put in a placeholder temporary tax ID number where your solo 401k tax ID number will go. That way you have the documents from us and you are qualified for 2020. Once the IRS reopens the first week of January, we'll get your tax ID number for your 401k plan, update your documents, and we keep the original effective date of December 2020. So it's okay to have your plan documents from us right now, even if you don't have the tax ID number for the 401k yet. That's okay. Typically, because you don't have the 401k tax ID number yet, because the IRS is closed, you would normally need to wait to open your bank or brokerage accounts until January so that you can make your contributions. That's okay too. According to the IRS, you have until tax day to make your contributions for the 401k plan, so long as you have the documents from us by December 31st. So it's okay to go in stages with this setup. First, we prepare your documents and we put that temporary placeholder tax ID number in. Then in the first week of January, we get your tax ID number, we update your documents, and at that time you can open bank accounts and brokerage accounts in the name of your 401k trust and make your contributions by tax day. That's the official stance of the IRS. Now, something pretty special and unique that one of our banks is doing for us, Titan Bank has a workaround where they are able to open your bank account for your solo 401k even without your 401k tax ID number. They can have that bank account open for you for the next couple of weeks. They open it within 24 hours, so they can have it open for you even without that tax ID number. So if you're quite concerned about wanting to make contributions as soon as possible, then you can still do that. So Mike, if you're gonna watch this Q&A replay, you and I talked on the phone earlier today, then I want to make sure that you know that if you have your documents from us, you are qualified for 2020. And if you want to make those contributions before the first week in January, if that's something that's a concern for you, then use Titan Bank. They're one of our recommended banks, and they will open your bank account within 24 hours of receiving your application, even if you don't have a tax ID number yet for your 401k plan. It's really special. They've never done that before. They're doing that for our clients because there are some people that are a little nervous. They don't want to wait until the first week of January. So that is a potential workaround. According to IRS rules, though, it's okay to wait. Once we prepare your documents, as long as you have those from us by December 31st, you have until tax day to make your contributions. So if you're feeling a little nervous about waiting, we would recommend contacting Titan because that's pretty special that they'll open that bank account for you immediately. Okay, let's jump into our pre-submitted questions here. The first question comes from Sylvia. Sylvia says, what is the 5500 easy and when would I have to file it? Great question, Sylvia. I want to start by sharing my screen with you. I'm going to take you right into our Solo 401k dashboard. So as a solo401k.com client, you get access to this dashboard as soon as we prepare your documents. Excuse me. Now, this is a really helpful command center for you. You can see that your 401k documents are right here in the middle. And we also have lots of tabs here that help out keeping track of your documents. If you want to upload asset statements, you can do that here to keep everything organized in one place. We also have a lot of helpful links up here at the top. I'm going to work my way over from the right-hand side of the page. So if you click on your name, this will give you the opportunity to change your password connected to your Solo 401k plan. You can also update your billing, update your credit card on file for that $99 annual fee. This rewards link takes you into your affiliate center. So you can receive affiliate or referral commissions for everyone that you send to solo401k.com who signs up for an account. The support link will open our knowledge base at support.solo401k.com. There's tons of helpful articles in here. So I strongly recommend that you click around in here. If you have questions about using your plan, this is a really good place to start. If we go back to the dashboard, we also have links for several calculators, contribution calculators, comparing Roth to traditional, Roth conversion calculators, retirement savings calculators. There's a lot of really good resources in here for you if you need to grab your numbers. The Loans tab will help you create a participant loan. That's where you can take a tax-free loan from your 401k plan. The Rollovers tab will create a rollover request form for you to send to your releasing custodian. This is one way to roll over funds into your new Solo 401k. And then we've got forms. So there's the coronavirus-related distribution form. This is part of the CARES Act. There's your contribution form, a loan repayment form if you take a participant loan, a third-party authorization form if you want us to be able to share your account information with a CPA or an investment advisor, attorney. There's an investment direction form where you can keep track of your investments, how you're investing your funds. A credit card authorization form if you prefer to send that in to us instead of just updating your billing online. And then the 5500 EZ. So now that I've given you that little tour, Sylvia, we can address your question, which is, what is the 5500 EZ and when do I have to file it? So first, the 5500 EZ is a simple reporting form to the IRS about a solo 401k plan. It is not a tax return. It's an informational filing only. You only have to file IRS Form 5500-EZ once you have $250,000 or more in your solo 401k. If you are under that threshold, if you have $249,000 in your solo 401k, you do not need to file the 5500 EZ. There are some attorneys or CPAs that think it's a good idea to file the form every year anyway, regardless of how much you have in your plan. We recommend that you chat with your own CPA or legal counsel to see what might be the right fit for you if you're under that threshold. But if you have $250,000 or more in your solo 401k, then you do need to file this form. The 5500 EZ is due by July 31st. So you have plenty of time to file that. And we give you reminders and updates every month leading up to the 5500 EZ. So usually starting in about March or early April, we'll start sending you reminders about the 5500 EZ filing. And we make it really easy. So you'll come onto your 401k dashboard here, and then you will fill out this short questionnaire. You don't need to say where your money is invested. You just say how much you have in the plan. The IRS just wants basic information. How much did you have at the beginning of the year? How much did you have at the end of the year? Did you make contributions? Did you do rollovers? Did you have loans? Once you complete this questionnaire, you'll click on this button and our software will create a 5500 EZ PDF form for you. You can then print that form, sign it, and send it off to the IRS. This will take you all of 5 or 10 minutes to complete. It's really fast. And we also have some additional information and guides for you. So right here on the right-hand side of the page, you can link right to the IRS instructions. Of course, this is for 2019 because the filing deadline has already passed for 2019 filings. You can also view our guide. We update this every single year so that you have clear instructions on exactly what the 5500 EZ is, when it's due, how to file it, and even step-by-step instructions on how to complete the form. And then finally, we have an FAQ here for you, and we update this every year, especially if the IRS updates the form. So there's a lot of really helpful guides and tools so that you can feel comfortable in filing the 5500 EZ. This is usually the only form that's required for a solo 401k. If you're doing Roth contribution or Roth conversions, there might be another filing that's required. But as far as reporting for the solo 401k, the 5500 EZ is it. And you only have to file this form, Sylvia, once you have $250,000 in the plan. The cutoff is December 31st. So for all of our new clients, if you're just setting up your plan now, then you're not going to be doing rollovers right now. Remember, the IRS is closed, so you can't open bank accounts or brokerage accounts, do that rollover until we get that tax ID number for you. So you don't need to worry about the 5500 EZ, even for next July. If you have $250,000 or more in your solo 401k on December 31st this year, then you will need to file the 5500 EZ by July 31st next year. And we will always send you reminders and trainings and guides so that you are well equipped to complete that filing. Great question, Sylvia. Thank you so much for asking that. The next questions come from Pascal. Pascal asks, I assume that the employer contribution should be made directly from the employer bank account. Yes. The employee contribution should be made from the employee personal bank account where the employee's salary is deposited. Yes. The contributions can be made any time in the year as long as they don't exceed the limits. Yes. So far you are 3 for 3, Pascal. Really great. Good questions. So yes, yes, yes to all of your questions. And then Pascal continues, one additional question. Can the contributions be made in the year based on the year-end salary, or does the salary need to be received before the contributions are made? For example, can the employee or the company contribute $20,000 on January 1st, 2021 before any 2021 salary is received? As long as the contribution does not exceed the year-end limits based on the total salary received for the year. Really great question, Pascal. Thank you so much for bringing this up. The answer is, it depends. So it depends on your business structure, and it depends on how you are running payroll with your accountant, or if you're using a payroll company. So let's think about it this way. Let's imagine, Pascal, that you are a 1099 independent contractor. You receive payments to you personally. Those go in your bank account, or maybe you have a single member LLC. You're a disregarded entity. Those payments come into your business bank account, and you're asking if you can make contributions before the earnings are received. It's probably okay for the profit sharing, maybe not so much for the employee salary deferral, because it's hard to justify that contributions were deferred out of your salary if you haven't received the salary yet. That might be a little challenging to justify. I think that you really want to work with your accountant and your CPA so that things are lining up correctly, so that when you're receiving this compensation as an employee benefit, you're putting some of that compensation into a company retirement plan. Now, I know that there are some clients that they have some cash left over. They know that they've got some sales locked in. They know they're going to receive compensation in 2021. So maybe they jumpstart their contributions for the year even before they've received payment on those sales from clients for their business. That may be okay for you. I think that really whether or not that works for your specific situation is a question for your accountant and for your payroll provider if you use one. Again, those employee contributions are salary deferral. So imagine the money is coming at you from your employer and it takes a left turn. It gets deferred into a 401k plan as an employee benefit. It's challenging to justify how you could make those salary deferral contributions if you never received the salary. Now, as a small business owner, and especially with a solo 401k, you have a lot of freedom in how you run your business, how you do your payroll, and how and when you make your contributions. So it's okay with us if you want to do it that way, but we would recommend that you work closely with your accountant and your tax advisor to ensure that all of the numbers line up correctly for your compensation and your contributions. Great questions, Pascal. Thank you so much. Next question comes from Carrie. Carrie asks, what bank do you use for setting up the account? Or do I take the documentation to my own bank and open something there? Great question, Carrie. So we strongly recommend that you use one of the banks that we train. It makes things a lot easier on you. You don't have to do that. You can go anywhere that you want. This is your solo 401k. You have checkbook control. You're the boss. If you want to use a favorite local bank or credit union, that's absolutely your right to do so. But keep in mind Not all banks are familiar with or supportive of a solo 401k plan. If you want to use your own bank, then you are the one responsible for educating the banker and making sure they open the account correctly. Just, we would love to help as many people as we can. That's why we do these Q&As. That's why we put out so much training. But think about it this way, Carrie. Let's say you live in Sacramento, California, and you go to Wells Fargo. And then I have Dirk, who's here on the call. He lives, let's say, in Long Island. He goes to Wells Fargo. And then let's say you live in New Orleans and you also use Wells Fargo. Well, Carrie, if I talk to your Wells Fargo banker, they're not going to talk to Dirk's Wells Fargo banker and train them. And they're not going to talk to Yunhee's Wells Fargo banker and train them. And there's thousands of different banks with different branches all over the country. So from a human resources perspective, we just can't jump on the phone with every bank or banker to try to personally educate them about the solo 401k. So we provide a lot of materials to you so that you are well equipped to move forward with this on your own if you want to use your own bank. Now, let me show you some of these resources so that you have them handy. So if we're here on our solo 401k dashboard, let's go right back to documents. Now I'm going to open up the signature pages. I'll click on view for the plan signature pages. We give you a little explanation of what's included in the 401k plan signature pages. And then right on page 2, we start discussing bank and brokerage accounts. We give you the information and the online applications for the 2 banks that we recommend. And remember, I mentioned Titan is doing something very special for our account holders this year, where they will open your bank account within 24 hours, even without the tax ID number from the IRS. It's really special. So if you are quite concerned about wanting to have a bank account open as soon as possible, Titan Bank is a great avenue to check for that, since they can open the account quickly and they can open the account without the tax ID number for the 401k plan. Eventually, you're going to need to give them the tax ID number, of course, which we'll get for you, Carrie, once the IRS reopens on January 4th. So this first page here, or second page of the signature pages, walks through what the 401k bank account is for, and also provides a bank account opening checklist. So Carrie, if you do not use one of our recommended banks, then you'll want to review carefully this bank account opening checklist. It's going to walk you through some of the common scenarios that you might experience with a banker who is unfamiliar with a solo 401k plan. Additionally, Carrie, I want to give you some other resources. So back on the 401k dashboard, click on support. That's going to open our knowledge base at support.solo401k.com. Now, if I just type in bank account in the search bar here, you'll see there's several guides and trainings and articles that walk you through different questions about bank accounts. A couple I want to bring your attention to are bank account recommendations. This is going to give you the contact information and online application links for our recommended banks. Bank account questions and answers will go over some common questions that the banks might have for you and how to answer them. And then, of course, we have guides on how to open each type of account. And this tips to open your solo 401k trust bank account is the information we've taken from that bank account checklist. So this is going to walk you through what to tell the banker if they are unfamiliar with a solo 401k. And just being honest with you, Carrie, a lot of banks are unfamiliar with a solo 401k. If you tell them that you're allowed to manage your own 401k assets and invest in things like real estate and Bitcoin and tax liens and private lending and crowdfunding, they might politely ask you to leave the bank if they don't understand what you're trying to do. What you're trying to do is completely legal, and you just need a bank that can support you. So I set all this up, Carrie, because using our recommended bank is real, or banks, there's a couple of them, is really like hitting the easy button. Both Solera and Titan, of course, are FDIC insured. They have robust online banking, mobile apps, and we know the VPs, we know the CEO, we know that they are training all of their new employees to support these accounts. We know they know what they're doing. They have dedicated solo 401k departments. There's not going to be any funny business or shenanigans when it comes to your account. And unfortunately, we have heard that happen at other institutions. I have two horror stories that I've heard in various iterations over the years. One client, their funds were frozen. The bank froze the bank account because they didn't think that the client should be allowed to manage their own 401k. They thought that the bank should manage it, or a large brokerage firm or something. So they froze the account and the client couldn't get their funds. The second horror story that I've actually heard a couple of times is some of these big banks, if they don't understand what to do with the funds, then they have sent the funds to unclaimed property. That's where they send the money to the state. And now you, as the account holder, have to try to go to your local state government and get them to give you your own money back. It's just a hassle. It can be a real headache. Now, this is not a diss on banks. Many of our clients have no problem. They open with Wells Fargo, Bank of America, Chase, JP Morgan, PNC, Fifth Third, US Bank. They have no issues. It doesn't have to be super scary, but you are responsible for educating the banker. You need to be the one making sure that they're doing it correctly. And if you're busy running your business or simply living your life, then using one of our recommended banks is the easy button. That's certainly the way to go. It's something that they do on an ongoing basis. And oh, Yunhee, you're so great. Yunhee says, I can say amen to Solera, and I'm sure now with Titan. I've worked with Solera for a previous Roth LLC. I love Solera. I do too. I have accounts in both places. I use Titan and Solera, and they're just great. They know what they're doing. They understand solo 401ks and self-directed IRAs. They don't question when you're trying to do a real estate closing or send money to a crypto exchange account. They just know how to support you. So Carrie, I would recommend you use one of our recommended banks. Titan Bank is one. Solera Bank is the other. We do provide you documentation. It's right in your solo 401k plan signature pages. So use that documentation, and I'm sure that you will have those accounts open without any problems. Thank you so much, Carrie. Okay, our next question was submitted on our website. And the question is, can I use a solo 401k to invest overseas in this manner? Number one, I purchase cryptocurrency. Number two, I either deposit the cryptocurrency in an overseas Forex account or in an overseas company, which shares the income they generate. All right, let's get to that question first, and then we'll get to your next question here, our internet submitter. So yes, the solo 401k can invest overseas. That's not a problem. However, the structure that you're doing that does need to remain compliant. So for this individual, for your question, you purchase cryptocurrency. My question would be, how are you going to do that? So your 401k trust needs to establish a crypto exchange account with an exchange. So if you're using Coinbase, Gemini, Kraken, Binance, Bittrex, etc., you would need to open an account in the name of your 401k trust. If you're using 401k trust funds, then the bank or brokerage account or exchange account also needs to be in the name of the 401k trust. So for part one of your question, you want to purchase cryptocurrency. That's totally possible. But pre-question number one is you would need to open an exchange account in the name of your 401k trust, deposit US dollars, either through rollovers or contributions into your 401k trust crypto exchange account, then you buy crypto. That's step one for you. So in order to get your 401k trust funds into crypto, You need to have some sort of a bank account or a brokerage account for your 401k trust, open a crypto exchange account for your 401k trust, put your dollars, you have to go fiat to crypto. So put your US dollars into your 401k bank or brokerage account, move those funds into your 401k crypto exchange account, and then you can get into your crypto position. So that's step one for you. And then your next question is, can you deposit the crypto in an overseas Forex account or in an overseas company which shares the income they generate? Yes, that should not be an issue so long as you're also following proper naming and titling of those accounts. If you're opening an overseas Forex account, that account needs to be in the name of your 401k trust and list your 401k trust tax ID number. If you're investing crypto in an overseas company, then the shares that you receive of that company need to be in the name of your 401k trust. The investor in that case is your 401k trust. So as long as you're following those steps, you're opening the crypto exchange account in the name of your trust, you're moving fiat to crypto, and then you're investing overseas also in the name of your trust, either through a Forex account in the name of your 401k trust or holding shares of an overseas company in the name of your 401k trust. As long as that titling is correct across the entire transaction, then that's totally fine. That's not an issue at all. So your next question here is, another question, is there an LLC involved in this structure? So it depends. If you're talking about the business that adopts the 401k plan, we do not require an LLC. Plenty of our clients are sole proprietors, independent contractors. Maybe you have an S Corp or a C Corp. That's your business that qualifies you to have a solo 401k. All 401ks are adopted by a sponsoring employer. 401ks are also known as employer-sponsored plans. So in this case, maybe your LLC is your sponsoring business. That might be possible, in which case there would be an LLC involved. Your LLC is your business, and then your business has a 401k. Now, another structure that some of our clients use, myself included, is something called a 401k LLC. This is where you use a special purpose LLC to hold assets. The LLC itself is a piece of your 401k. It's an asset owned by your 401k. The LLC is not required in this structure that you're talking about here, but you might find it to be necessary. If you were going to do that, then we might see something like this as your flow. You open the 401k with us. We also form a special purpose LLC. Your 401k has a bank account. Your LLC has a bank account. You move money from, let's say, an old IRA into your 401k, and then that moves into the LLC, okay, owned by the 401k. Now this LLC is who's doing the investing. This LLC needs to open a crypto exchange account, right, in the name of the LLC. And then this LLC might open an overseas Forex account or own shares in an offshore company. That structure is not required. It is optional, but it may be something that you want to explore in this situation. We can handle opening the solo 401k and forming your special purpose LLC. That is an optional item of customization for our establishment of a solo 401k plan. So I hope that that helps. You have a meaty question here, but I do think that it's possible. So yeah, if you have any questions, let us know, and we look forward to receiving your application and working with you. Okay, next question comes from Bharat. Bharat says, how does managing beneficiaries work? Can we have one of the beneficiaries or a third party act as manager to account and manage the bank account and investments? So, Bharat, I want to make a distinction here. The beneficiary is different from the plan administrator. The beneficiary is who receives the assets in the case of your passing. Knock on wood, God forbid, you should live to be 100. We want you to live to be 120 years old. God forbid anything should happen to you. But the beneficiary is who receives your assets in the case of your passing. That's usually a spouse or your children or your named heirs. That's different than a third party managing your account. So your beneficiary is who receives your assets in the case of your passing. You wouldn't usually put a third party as a beneficiary because that would mean someone like your account manager is receiving your assets in the case of your passing, and that's not you. That's probably not what you want. It is possible to have an external administrator, a third-party administrator, but you may require something called an ERISA bond. So the solo 401k is a checkbook controlled plan. What that means, Bharat, is that you are responsible for maintaining your own assets. You are the fiduciary. You are the responsible party when it comes to the solo 401k plan. So when it comes to the solo 401k, you're deciding how those assets are invested. What if you have an investment advisor or a wealth manager that you're working with? Typically, they will open an account. You're still the trustee, and those assets are simply under your management. We don't usually recommend that you give signatory authority of your 401k bank accounts to a third party. That's just not usually how it works with investment advisors. Typically, they will open a custodial account where they are listed as the investment advisor, but you're still the trustee. Giving someone signatory authority over your bank account is a little bit different. So we don't usually recommend that you have a third party managing your bank account. Managing investments might be something that an investment advisor would do for you. We do have a wealth management arm of our business. If you're interested in learning more about our wealth management services, you can join the waiting list at neighbors.com. I hope that helps, Bharat. Thank you. Okay, next question, also from Bharat. Oh, good. You have a couple more questions here. I think you're on live, Bharat, which is great. So really good to have you here. So Bharat, this next question is, what type of Fidelity account would be needed if we prefer to have them as a bank? So Fidelity doesn't really operate as a bank, but they will open an account for you. Let me share my screen here. So we are here on our knowledge base. I just see a couple more questions here posted in the chat, so I'm just bringing them into the question box. Okay, so on our knowledge base at support.solo401k.com, I'm going to just type in Fidelity. And you'll see right here, Bharat, there is an article all about how to open a Fidelity account for the solo 401k. I'm going to type this into the chat for you, Bharat. I think you're on with us live. That way you can open that account right up. Or open up the link to the knowledge base article. Fidelity calls this a non-prototype retirement account. And I think that they give you checks with this account. So you can hold the funds in a money market account or a cash account with Fidelity. And then they will give you a checkbook. They do not give you a debit card where a bank account will. So you can use Fidelity if that is your preferred platform. I hope that helps, Bharat. Thank you. Okay, next question. So more clarification here from Bharat. Can a beneficiary also be added as a plan administrator? No, we don't really recommend that. It depends who it is. I mean, if it's your spouse, then you can, your spouse can co-administer the plan with you. But if the beneficiary is someone else, like an heir, then they're not going to be a plan administrator. These are self-administered plans. The reason why you have so much flexibility in the solo 401k is because you are the one managing your assets. When you start bringing in external third parties, there's all kinds of oversight that is required because the IRS does not want any shenanigans in an employee benefit plan. So we do not recommend that your beneficiary also be your plan administrator. Great question, Bharat. Okay, so one more question here from Bharat. Can we have two solo 401k accounts, one with you and another with Fidelity, for the same self-employed business and for the same participant? Yes, that's possible. We don't recommend it. It can be quite confusing for you to maintain two 401ks for the same plan, or for the same business, excuse me, and it's really not necessary. Your solo 401k can have unlimited depository and holding accounts underneath it. So, but your solo 401k with us can have a Fidelity account. It can have a bank account. It can have a Schwab account. It can have a second Fidelity account for your spouse. The solo 401k gives you all of those options. Maintaining a second 401k plan for the same business usually just creates confusion because of your contribution limits. Those are, for the entire business. You don't get to double up contributions because you have a Fidelity 401k and a solo 401k. You have to make sure everything is kosher among both plans. So it is possible to have two 401k plans for the same business, but it's not recommended and it's not very common. Great question, Bharat. Okay, so Yunhee says, hi again, Rachel. Hi, Yunhee. Good to see you again. Hope you had a nice Christmas. Thank you. I did. I did no work. It was awesome. I hope you had a wonderful Christmas too. Since I missed the Wednesday 12/23 deadline, the IRS is closed. Should I just wait until the new year to form my solo 401k? I know I've already filled out an application. I've not received a copy of my application, which I would like to have. Anyway, please let me know. Great question, Yunhee. We're happy to forward you a copy of your application. That's not a problem. And I think the question, Yunhee, is, did you receive income for your business in 2020? And I know you're on here live, Yunhee. If you received income for your business in 2020, then yes, you should set up your solo 401k now so that you're qualified for 2020. You're qualified even if you don't have the tax ID number from the 401k, from the IRS for the 401k yet. Okay, yes, you did. So I would say then, yes, you do want to set up the solo 401k now so that that you can make contributions. Okay, Yunhee, so you said you made $1,000. So the question is, first of all, congratulations on making $1,000. That's really great. Your first $1,000 is the hardest to make. So if you're not contributing any money into the 401k, you're not contributing that $1,000, I think you can wait, Yunhee. I think it's okay to wait. If you said to me, I made $100,000 and I really need to make this contribution for 2020, I would tell you, okay, then you need to open your plan now so you're qualified. But for this $1,000, which again, congratulations, that's awesome. To make your first $1,000 in your business is awesome. And if you do not need to contribute those funds, then I would say it's okay to wait. You can wait until January. So yeah, great question, Yunhee. Okay, and then Yunhee, I think you had a couple of extra questions. You said you did not see the option of the special purpose LLC on the 401k application. That's an item of customization after you're going through the application. So you'll complete the application, submit payment, and then we have a couple of items of customization for you. The special purpose LLC is one. A Roth IRA LLC is another. Yunhee, I know you already have the Roth IRA LLC, so that's not applicable to you. But for some of our other new account holders here, the Roth IRA LLC is an optional item of customization add-on to your solo 401k plan. Now, I want to make things very clear here. Your solo 401k already includes a Roth 401k. Already. Roth IRAs have different rules from Roth 401ks. We actually call Roth IRAs the redheaded stepchild of retirement plans. They don't play well with others. Roth IRA money is the only retirement account that cannot roll into a solo 401k, even a Roth 401k. So as you're going through your 401k setup process, those optional items of customization are there. Yunhee, the special purpose LLC, is there as an optional item of customization in the online cart for you. Okay, so let's go. We've got, okay, great. Sylvia, oh good, you're on here live. Great to see you, Sylvia. So Sylvia says, if I have a tax ID and I just opened my solo 401k last week. Is it best to move my SEP IRA money into the solo 401k before the end of the year? It's over 250. Honestly, okay, so first of all, I can't give you tax advice, Sylvia. I am not your accountant. This is just a Q&A call. I think that, if you're not in any big rush, then you can wait to move over your SEP IRA and into the solo 401k, and that way you will not be required to do the 5,500 easy. If you have $250,000 or more in the solo 401k on December 31st, you will need to file the 5,500 easy next July. It's not a big deal, as you saw earlier in the call. It's pretty straightforward, but hey, if you can avoid one more IRS filing, why not? I think it's okay to wait. Unless you have, a burning desire, there's an investment you're trying to do, like on January 2nd or something like that, then I think you might want to move the funds in, but otherwise, just enjoy the last couple of days of the year. Start your rollover in the first week of January, and then you can move on to, continue to use your solo 401k. Good question, Sylvia. And okay, Marie says, to follow up on Sylvia's questions, we, or the CPA, are not required to file any forms to the IRS in regard to how much is contributed to the solo 401k Roth, the solo 401k pre-tax, or after-tax non-Roth contribution, correct? We received Form 5498 from the brokerage firm for the IRA contribution, and was indicated that the form is being furnished to the IRS. So the solo 401k is different? Yes, Marie, a solo 401k is different. So the 401k, you do still chart the pre-tax contributions on your tax return, but there's no 5498 that's required for a 401k plan. So I'm going to share my screen here. Let me go to our website at solo401k.com. Hold on. I don't think you can see my screen yet. I have to choose. Okay, so now you should be able to see our website at solo401k.com. And if you do a search in our blog posts, I like to do the search for claim, as in, how can I claim my tax deduction? We have a blog post right here, Marie, how to claim solo 401k contributions on your tax return. I'm also going to put this into the chat for you so that you can easily access that. So Marie, there is a place that you want to claim those contributions as a tax deduction on your tax return. But there's no extra form that the IRS requires for 401k contributions. That's because the business is going to be informing the IRS about those contributions for pre-tax. If you're doing after-tax or Roth contributions, you don't have to alert the IRS to those contributions because you're not looking for a tax deduction. So the same way that you don't notate Roth IRA contributions on your tax return, you also don't notate Roth 401k contributions on your tax return. You're not looking for a tax deduction, so the IRS gets all their tax dollars from you, so they don't require any extra forms. On the pre-tax side of things, Marie, the business and you as the employee are claiming those deductions on your tax return as a tax deduction, and that's how the IRS is informed that you made those contributions. So no 5498 required. Always double check with your CPA. The rules change, not infrequently when it comes to the IRS. So always double check with your CPA or your tax advisor. But the 5498 is not required for 401k, and you'll claim those tax deductions on the tax return itself. Great question, Marie. Okay, Yunhee says, what would be the difference between having versus not having a solo 401k LLC? When should I do what and why for each scenario? Great question, Yunhee. I think really the when and why depends on your investments. So let's say that you are just interested in opening a brokerage account. You want to hold stocks and bonds and index funds and do Roth contributions and Roth conversions and things like that. That's not going to require an LLC. Your 401k trust can buy and hold assets directly as is. Same with crypto. You can open a crypto exchange account in the name of your 401k trust. The LLC is not required. Where I think a lot of our clients really like to use the LLC, myself included, is when it comes to real estate. So many title companies are not familiar with a 401k being able to buy rental properties or tax liens or promissory notes or mortgage notes. So sometimes they get a little bit confused. They can slow down the closing or ask for a lot of documentation that's just not required for a retirement trust. Using an LLC is really normal for title companies. So that can make the closing process happen much more quickly. Additionally, some of our clients like to use a special purpose LLC for additional asset insulation and potential liability protection. So think about it this way. Let's imagine you have $500,000 in your 401k trust, and you want to buy a rental property worth $100,000. And now let's say that the tenant of that property wants to sue the property owner. In this case, the property owner is the 401k. So this tenant can try to go after all of the assets in the 401k trust, even though that property is only worth $100,000. You have $400,000 cash, other investments that could potentially be pulled into that lawsuit. Alternatively, let's say that you have the 401k plus the LLC, and you're in the same scenario. Your 401k has $500,000. You want to buy a property worth $100,000, but this time you title the property in the name of the LLC. If the tenant tries to sue the property owner, presumably in this situation, they would hit the ceiling of the LLC. They don't even know the 401k exists. Now, of course, anyone can sue anyone for anything. So you always need to work with your accountant or your tax preparer to see if this is the right structure for you. But for many of our clients, specifically when it comes to buying and holding real estate, the LLC tends to provide a really big advantage. So great question here, Yunhee. Oh, and I think you have a follow-up question. So I'm provoked to ask now. I think you're saying what I'm provoked to ask now is, should I opt to add the solo 401k LLC and then invest in real estate through the LLC and then name the other investments directly through the name of the trust? That may be what you decide to do. I know for many of our clients, they have a brokerage account in the name of their 401k trust. They use their normal brokerage account in the name of the 401k trust for their traditional equities. Some clients might have a crypto exchange account in the name of their 401k trust. How you structure your investments and the different layers of asset insulation and asset protection is a question you need to direct to your tax advisor. They're the ones that will help you structure everything from a liability protection perspective. But what we can do is establish your 401k and form the LLC owned by your 401k so that you're on that right path for your asset insulation. Great question, Yunhee. Thank you so much. And Yunhee, I do see you have another question, so we'll go ahead and get that in here as well. Next question from Marie, and we are almost out of time for today, but we will be back tomorrow on Sunday. So if you have more questions, definitely you can post them here. If we don't get to them today, we will address them tomorrow. Marie says, can a solo 401k have one participant but two trustees or two custodians? Pros and cons? Yes, you can have your spouse as a co-trustee. Now, Marie, usually the reason why someone is asking to have their spouse as a trustee is because they want a spouse to be able to take over just in case, God forbid, something happens to you, right? You would have a spouse be able to take over. You don't need to list your spouse as a co-trustee. In your 401k plan signature pages, and I'll go ahead and share my screen here so we can go over this together. In your 401k plan signature pages, there's something called a contingent successor trustee. Hold on, let me re-log in. All right, so if I'm looking at the 401k signature pages, I'm going to scroll down until I see something called Contingent Successor Trustee. So not this one. This is Appointment and Acceptance of Trustee. That's you, Marie. Beneficiary designation, that's who gets the assets in the case of your passing. This form right here. Appointment of Contingent Successor Trustee. A contingent successor trustee is who takes over for you as trustee should something happen to you and you can no longer continue as trustee of your plan. Usually when you have a one participant plan, so maybe Marie, it's just you in your business, usually you would be the named trustee and you can list your spouse as a contingent successor trustee. That way, knock on wood, God forbid, if something should happen to you, your spouse can take over as trustee and your spouse can wind down the plan, roll out the assets to another retirement plan, and take over in that capacity as trustee. It's pretty uncommon that you would want someone to be a co-trustee with you if they don't also have assets in the plan. We have some spouses that do this where maybe, let's say, Marie, it's your business and you're the one making money and you're the one putting funds into the plan, but your spouse runs the investments in the household. In that case, it's okay. Yeah, your spouse can be a co-trustee with you, but that's not that common. Usually when people are asking this question, it's because they want to make sure that there's a smooth transition if someone needs to take over for you as trustee. And that's when you would use this contingent successor trustee form. Really good question, Marie. I'm glad you're thinking about this stuff. Okay, next question. This is going to be our last question here, last call for questions. If you have any questions you'd like to submit, make sure that you are clicking on the Ask a Question link right here or posting your question in the chat. We'll do one final call for questions today. And no problem if you don't get your question in today. We will be right back here tomorrow at 3 p.m. Eastern time. That's going to be Sunday. We'll be here tomorrow at 3 p.m. Eastern time. We are hosting these Q&A sessions every day until the end of the year so that we can be here to make sure that your last minute questions are answered. So Yunhee says, will I be allowed to redo my application, especially if I'm going to wait until January to open a solo 401k? I ask because I'll probably just do a DBA. I've been trying to decide if I should just use my own name or go ahead and form a DBA. Great question, Yunhee. You will make the decision if you're going to use a DBA. And I would say that probably the simplest thing to do if you're going to wait until January is just resubmit the application in January. That way we have the fresh information from you on exactly what you want on your plan documents. So if you plan to wait until January, then I would say if you're going to do the DBA, go ahead and proceed with that and then resubmit the application whenever you're ready to get started. Okay, Carmen, it looks like you started typing a question, but didn't get to all of it. So I'll give you another few moments here, Carmen, so that you can type in your question. And then let me just check the chat here. Looks like we've covered everything here. Again, so wonderful to have you all on these sessions with us. Carmen, we'll give you one more chance to add in a question if you want to. And then, oh, you guys are so welcome. I'm so glad to be here with you. It's really awesome to get to spend time with you and to make sure that your questions are answered. You're asking the right questions. You're getting yourselves, your financial house in order. And that's really, really important. So I'm glad that you're doing that before the end of the year. As a reminder, if you are brand new to us and we're just now setting up your solo 401k plan, then you will have your documents ready for 2020. The IRS is closed for the rest of the year, so we will prepare your documents now. You'll have them qualified for 2020, and then you'll be able to make contributions to your plan until tax day. You do not need to make contributions by December 31st. You can have until tax day to make those contributions. That also means you have until tax day to open your bank account and your brokerage account for your 401k plan. You don't need to be in a big rush to do that right now. And so that's something that you have time to do. All you need to do by the end of the year is get your documents from us. So, okay, Carmen, great question. I wonder for asset protection, should the LLC direct the 401k or vice versa? Thank you. I don't know if I have a diagram on this computer of the 401k and LLC. I'll see if I have one here. 401k LLC. Carmen, to answer your question, the 401k is an asset, the LLC is an asset of the 401k. So the 401k invests money into the LLC, and then you manage the LLC. So I usually have a diagram. I don't have one with me right now, but imagine this is your 401k trust, right? You've got your bank account, your brokerage account for your 401k. Your LLC is an asset under your 401k. So the LLC has its own bank account, but the LLC is wholly owned by the 401k. So your only money that's in this special purpose LLC is from the 401k. The 401k owns the LLC. The 401k invests in the LLC, and the LLC just holds money and assets for the 401k. I hope that helps. So, and thank you, Yunhee, for jumping in. Yes, you're exactly right, Yang. These are recorded. You can find all of the recordings at solo401k.net. That is our free investor community. Anyone can join solo401k.net. It's a wonderful community put on for you by solo401k.com and Neighbors Group so that you have an opportunity to chat with one another, to meet each other. Our experts are in the network every day answering questions. We post tons of trainings, interviews with CPAs, attorneys, ways that you can invest in things, and financial news. We cover a lot of financial news in there as well. So if you haven't already joined our investor network at solo401k.net, make sure you join us there. We'd love to have you. And then I think that'll do it for us for today, everybody. So we look forward to seeing you tomorrow at 3 p.m. Eastern, and have a great rest of your day.